All right, hello and welcome everybody. Doug here again with the LincolnList.com. I'm going to do a quick trading recap here about a really nice textbook tier 1 trade, one of our favorite short trades, right out of the open, $1,430 in gains. And when I talk about right out of the open, I mean like right out of the open. Now, if you were following me on Twitter, you do follow me on social media, look back, I tweeted about this in the pre-market, talked about some of my strategies, but I went into this a lot deeper with the members of our trade room. And if you look, I just attached not only the P&L here of the trade, but I also put the comments or the alert that I typed into our text recording into our trade room. Now this is going to be delayed a little bit, what you're seeing in the type, because first what I do with our members is we're talking about this in pre-market, very similar to how I'm talking to you right now, telling them I'm going to enter this trade or what I'm going to do. Then once I enter, I tell them that I'm entering this trade and my position size. Then I go ahead and type it in. So there's a little bit of a delay there, but not much. You just get the idea of how this whole thing went. But what we're going to talk about is how this trade's set up and what we look for at the Lincoln List and how we capitalize on it. Because one of the things that's been a topic of our videos lately is people have a tendency, they want to short a stock because it goes up a lot. We've talked about that in these past videos. People want to buy stocks because they go down a lot. That's not how I do it. The way we're doing it in the Lincoln List is we capitalize on euphoric moves. It doesn't matter how much a stock goes up to me, that's important, as how quickly it got there. So, if a stock goes up 10 or 15%, but it's only going up 10 to 15 cents a time and grinds out all day and never really crosses some of the short-term moving averages, I don't like to short grinders, and I never really short grinders. So I only look for euphoria plays. So what we got here, let's talk about SIMO, talk about how we looked at it and what we were going through, and see if I can shed some light and maybe help you make some money in the future. You get a pre-earnings announcement release. It's not the earnings, just a pre-earnings announcement. All good news. Stock opens up. By the time I get up, I've already missed this piece here, but it's already up like 16, 17% thereabout, which is already high enough for a stock like this, especially when it's not official. It was only hypothetical about their earnings, not official. So we're kind of, but at the open, when I get up, we're kind of talking about it in the trade room, that the spread is not really good. So what I mean by that is the volume was kind of light here. I think you had 53 and some change as the bid, and you had 52.50 as an ask. It was kind of distant, so I didn't want to get involved in it. And I said, hey, if this thing goes parabolic at the open or pushes at the open, and again, if you follow me on Twitter, look at the tweets. It was all tweeted in its pre-market. I said, if this thing squeezes into the 54s to 55s, I want to go in with a starter position. Now, for those that don't understand what this is, one of the successful ways you can keep yourself from getting squeezed or getting punched out on any position is using a starter. And a starter is simply a feeler position. You have skin in the game. You get a feel for how the stock works, but it allows you to stay in a position longer. So when you're trading a parabolic, let's say if there's a disadvantage, one of the disadvantages is sometimes this stock could open up, squeeze to $57, and then instantly the next tick come back down to 55. I've seen 100 of them do that. Just on one or two bid ask, couple hundred shares, squeeze it up real quick, and then it comes down. So I'm kind of prepared for that. But what happens is the stock starts perking up here in the pre-market. I'm going to expand this chart just a little. This little gray space right here is pre-market and post-market on Thinkorswim. So it starts juicing in the pre. I kind of wanted this to happen at the open, but it was already going. And once it got up to 54.50, I'm like, I'm going to go ahead and go in here with a half size, which was 500 shares. I said, if it squeezes me up to the whole number of 55 or 55.50, I'm okay with adding because we're already at 16, 17% up on the day. It's speculative earnings. I think there should be some sort of profit taking or quick pull retracement. Plus, if you've seen any of my past videos, I always talk about the RSI, the relative strength. Now, there's no golden indicators in technical analysis. They're all just benchmarks. It's not perfect. But when a stock on a 5-minute chart gets a 90-plus reading in the RSI like this one, it's a pretty good sweet spot. I mean, you're better off shorting at that point than you are longing because the stock is either going to consolidate normally at that reading or it's going to start selling off. One of the two, depending on how the setup is. Again, not golden, but it's something I like to use. So I just go in here with as you can see, 500 shares, 54.50, and I just almost top ticked it. Now I'll be the first to say I don't always score it like that. I mean, that was just sweet. It barely ticked a few pennies above 54.50, and it just instantly within a minute, this thing gets smoked. One candlestick, 54.50, all the way down to 52. Then it moves from 52. As soon as the market opens, it drops from 52 down to 51. Now I took a partial on this thing at 52, covered half, and then covered the rest of it down at 51. That's about $1,430, all within the first 3 minutes of the day. Really, your day is done after that. And we've gone through this before as well. If you're in trading, if you do it right, you have your game plan ready, and you're focused in the morning, the majority of the money you'll make will come within the first 30 to 45 minutes. You don't have to work the rest of the day if you don't want to. Actually, it's counterproductive for a lot of traders because they'll make a lot of money in the morning and they feel they got house money, quote unquote, right? And then they'll trade more aggressively and more greedy, and by the end of the day, they've given those gains back and then some. So, you score up something like this. I have to stick around because I run a trade room all day. But hey, you make money like this, do yourself a favor, leave, go to the beach, go out, just walk away. It was a good start. Don't do anything that's going to mess that up. Different way to look at it, but a little bit of a rant there. So let me tell you why these trades work and why we have success with them. As I said, a lot of people think you short a stock because it goes up a lot. That's not how we look at it. To me, it's more important about not how much it's up in percentage like this one, which was good, 17%, but it's how it got there. This thing closed at 48, roughly $48. And then before the market's even open, you're at 54.5. You can tell that people are having fear of missing out. So one of the reasons why this works, we've all been in that situation as traders where we have had fear of missing out and we chased the stock. Hey, I'm guilty of that too. We've all been in that position. You know what that feels like, where you feel like, oh, I'm missing it, it's going to rally, and I'm not going to get anything. And that happens. So this thing is squeezing up here. I realize people are chasing, but I'm thinking maybe in the market open, it'll squeeze even more because people will want to do it. But no, it just starts selling off. Now, the reason why this works is because once you start getting a little bit of the red, the first people to go are the people that bought here late because they kind of know they're chasing. Even if you do it anyway as a habitual habit, you still kind of know you're chasing, right? So they know they're chasing. They're the first that get stopped out. The second group of people are the ones that bought a little earlier that were sitting on gains, and now they're looking at those gains evaporating. Right? Again, we've all been in this situation, right? If we've traded where you've seen, hey, I'm up $100, then you look at it, it says 80, 60, 40, 30, and you're like, damn, I better get rid of this stock before it turns to zero. Then they get out, and it's like this snowball effect. The first people get stopped as the chasers, then the people that had a little bit of profit get taken out, and all the people that were bagging it overnight or got lucky when they woke up and said, hey, this is great, they see this P&L coming down, they do the same thing, and the stock tanks. And eventually algos or day traders or momentum traders come try to pick up these bottom scalps off the MAs, and oftentimes they'll bounce. I mean, that's the cycle of how a parabolic works. And if you guys want, I won't go into it deeply here, but if you want more information on this, I did a complete webinar on RSI trading and how this whole emotional cycle works. Just send me an email, support@thelincolnlist.com. Ask for the High RSI webinar video. I'll send it to you. I will definitely send you the video, or you can just Google on my site, top strategies for this market webinar I recently did. It really goes into detail about how these work. Now, this thing ends up going down a lot more, but you can only complain so much about a win like that. Again, the whole trade works on a few things. Number one is being prepared and understanding how these traded. When we're talking about, you're talking about strategies and learning something, and some people always ask me, how do you make this work? How do you top tick? It seems incredible. How do you do this? Like it's some magical formula. It's not, trust me. This comes from thousands and thousands of trades, and I get knocked a lot on social media because I like shorting, and I've talked about it before. I don't like shorting because I hate companies. It's just a strategy that works for me. I got nothing against any of these things, and I'm a day trader, so I don't care if the stock goes back and makes a new high. I just want my little piece of the pie, right? That's all I'm trading. I'm just trading this little time frame. So I've done thousands and thousands of these trades, so I know just by looking at it exactly what the outcome. Sure, I'm wrong. I'm not 100% perfect. Nobody is. But I got an idea of how stocks work and how stocks behave. And that comes through experience. And through my experience, I come up with a couple of key indicators that help me isolate my entries. as best as I can, and then I work from there with mild positions to keep myself in the game and keep my risk profile good. And that's how I trade stocks. And then mostly sometimes, they'll change, sometimes it'll squeeze. I was ready to add. I had a backup plan. So if I got squeezed at the open, I was prepared to add. If it built a pattern and started to roll over, I would have doubled the size of my position and then used a stop. So there's different variations of this. If you want to learn how to trade these things, I urge you to visit thelincolnlist.com. Take a free trial. No money involved. Just come into the room, see it. Having the experience there to walk you through a trade like this, so you see the whole entire picture. Because a lot of traders, they're just zoomed in on one thing. They're like really narrow-minded. If you just kind of look at what's happening, take your time, be patient, wait for your setups, you should do well in this business. You don't need a lot of strategies to make money. You don't have to be able to trade everything. You just need to be able to trade one thing really well and just spend your time looking for that one thing, and you're good. And this also works for great bounce plays. Got tons of videos. Again, a great start to the day, $1,400 there in less than 5 minutes. Visit thelincolnlist.com if you want to trade with us live. If not, I hope this video shed light on you. Again, if you just want more about the strategy, send me an email, support@thelincolnlist.com. I've done tons of videos absolutely free to you if you want to learn a little bit more. Hope this sheds some light on how we do things at the Lincoln List. Hope I opened your mind to some way to make money. If you like short selling like this, hopefully I'm kind of making a little bit of sense to you on how it works. As always, thanks for watching this video. Take care of yourself. Till next time, talk to you again.